All right, guys, welcome back. Let's look at some stock charts, cover some trade ideas, and run some technical analysis on these markets. So what I want to start out with today is just to follow up on this Zoom trade idea that I put in the video yesterday. And what I want to point out is I love trading these wedge patterns, and this is what we have here. This is a bearish rising wedge, and typically when you have these, they usually, 80% of the time they'll resolve or to the downside. They'll break down out of the wedge. That's what this pattern is setting up to do. So when I see something break to the upside and kind of do the opposite of the probability of what it should do, typically what I look for is whether that move is faded. Oftentimes when you'll see the breakout higher like this, it's the shakeout move. It's the move to run stops, essentially. So anybody who was bearish, maybe getting bearish right here at resistance, thinking that they had a good position for a move to resolve to the downside, because that's an objective area to short right there at resistance. They get kind of shooken out when the move goes against them and it starts running higher. So that's what that move typically is meant for, is to run stops. And so when I see that, I usually look for a fade of that initial move. Now, I don't just instantly short until I see that fade, but I anticipate it. I'm looking for it. I'm expecting it to come. And that's exactly what I said. That's exactly what we got today. Yesterday in the video, I pointed it out saying, okay, this is probably going to fade. So here's the trade that, the trade's not objective anymore. But yesterday when I pointed it out, you could have taken it this morning like I did. I shorted this thing this morning. And you can see that, from this area, basically we opened up and it's down, 4% already. And the profit target right here is down here at this trend line, 775 is kind of the initial profit target. And then what I like to do after we get there is wait for a break back down into the wedge. And if it breaks back down into the wedge, then you can reestablish a short and let this thing run down. This is very similar to the Walmart trade. If I go back, here's the Walmart trade in the daily chart. I'm kind of repeating what I showed you yesterday, but I just want to firm up the concept here. Bearish rising wedge on the daily chart, so a major wedge, and it's been in play for a long time. And here you can see there's the overshoot, running stops. And then it fades back down to support. They chopped it up once more, but again, it's back down within the wedge. And this stock continues to be weak. It was down yesterday slightly. It's down again today slightly. Nothing major. It's just moving, grinding lower. But it's setting up, I think, for a gap down or an impulsive move down. When you get these sideways consolidations, eventually they break. And this one tells me it's going to break to the downside because we have already had the breakout right here where it shook everybody out. This move right here, if you didn't get shooken out right there, then you're probably not, going to get shaken out until you make some money on this thing. And that's exactly what I'm watching for. I'm looking for this thing to break down. I am short Walmart. Going back to Zoom, same setup. This is basically the same setup. It's just on the hourly chart, so it's not necessarily as big of a move potential, but same setup here, and it continues to fade. I suspect by the end of the day, we're going to park it right around here, or we're going to tag this level at least. We could move lower, but this would be a level of support potentially. So down around this 205, 204, something like that. So that's just something I want to point out. And, this morning I took this trade and doing nicely so far. All right, sorry, I had to do a quick call. But the point is that these bearish rising wedges, when they break out like that, you want to look for a shakeout move or a fade move. And that's what we're getting in this one. And it's exactly what we got in Walmart as well. So these patterns set up, it's the same pattern. It doesn't really matter the stock, although different stocks have different kinds of momentum. Zoom obviously has a lot of momentum. I mean, there's a lot of people piling into this thing, or have been recently. And what I look for is the momentum to shift the other way, because that's when everybody scrambles. And it's it's everybody scrambles quickly. And so you can short these things for a lot of profit if you catch the move or catch the timing right. And So anyways, this is rolling over, and so far today down about 4%, and probably by the end of the day it'll be down about 7%. So we'll see. You can see it's down 5.5% right now. So all right, let's look at some other ideas. Let's look at this NVDA trade. So this is another one I'm shorting, and the chart, it's not, it doesn't look like a great short, but it still is holding up and playing out as I would expect. We had, if I go to the daily chart, you can see that we had this island top cluster right here that created a reversal. So here's a reversal candle. And then what we've gotten is the kickback rally. And these kickback rallies are typically meant to shake out anyone who took that island top reversal. So when we gap down right here, the way you play these is when you have an island top like this and see the gap, you have a gap here, and then there's a tiny little gap right here. The way you play these is when you make the island cluster top and you gap down, you short on the gap down. So you take the short there, and then these things should resolve to the downside. And then what I like to do is just set my stop up. You can set it up at the high, the breakdown candle, 367. You could set it your stop just slightly above that, or you could set it just slightly above the halfway point, about 361, 360, somewhere right in there. And what you see they're doing, what they did today, it looked like, is they were trying to run those stops. They were ramping it up today in this hour right here, popped it up above the high of this range, but then it instantly was sold off, and now we're back down within this range. So it's still holding within the parameters of this short trade that makes sense. And so what I think is going to happen is we're going to roll over, and we're going to at least come down to this trend line. You can see nice established trend line right here. So I think we're going to come down to the trend line, and then at that point we'll have to see what happens, but I'd expect that it's going to break the trend line, and we're going to look at this thing rolling down to 303.50. And if we get there, we'll have to look to see, if we have some other ranges or zones. But for now, 303.50 is the target. And that would be, here's your breakdown. That would be a 12% profit. So it's kind of what we're looking at on that one. And you just have to give it time. They continue to move these things. And, when your breakdowns happen quickly. So typically what happens is you'll consolidate and you'll grind higher, or you'll kind of grind higher, and then when you break down, it happens all at once very quickly. So that's why when shorting, most of the time the prices are moving against you, and not always aggressively, but they're just grinding against you, moving against you little by little, and then when they finally do break down and the prices move in your favor, they move aggressively in your favor. And so that's why, when I put out videos about me shorting something, 80% of the time the prices are moving against me, and it feels like you're wrong because 80% of the time you're losing small amounts of money. But then when it actually breaks down, you end up being right in a big way and very quickly. So that's just the nature of shorting. Prices grind higher 80% of the time, and 20% of the time they fall and crash down very quickly. So just keep that in mind when I put out these videos where I'm talking about shorting something. That's just the nature of how it's going to go. When I'm covering a short, 8 days out of 10, the prices are going to be moving against me. Okay, Tesla's set up in a very similar situation as Zoom and Walmart. Although it doesn't necessarily have a bearish rising wedge, what it does have is this trend line on the hourly chart that was established. It's a descending trend line where we had a couple reactions, and you can see that this is a valid trend line because they gapped above it. So that was the move where that just helps validate this trend line. So we gapped above it. So that's bullish. All right. But is this just the shakeout move? Do we roll over and come back and at least back test the support? I think that's what's going to happen. There's a high probability that that's how this plays out. and potentially, you know, goes lower and breaks down. So this might just be a shakeout move. They could easily gap this down and create an island top cluster. So that's just something to keep an eye out for. I'll be looking for that as well. All right, and now we can go into some more general macro charts to get an idea of maybe where the markets are heading from here. Okay, let's look at the Qs, then we'll jump over to some of these other things. So look, the market is clearly bullish, but that doesn't mean it's going to stay bullish. So that's called recency bias, when something's just been moving higher. Especially, I think bulls tend to get recency bias a lot more than bears. And that's just because, again, markets tend to move higher 8 days out of 10. You know, 80% of the time, markets move higher. So I think when you start to see, you know, when markets are moving higher and you have consistent small moves up, the bulls tend to get recency bias, where they think that the market's going to always continue to move up. But typically what happens is, as you're moving up, if you're going to get a breakdown, oftentimes you'll give back, you know, a week, 2 weeks, a month worth of gains in 1 day's worth of breakdown. So it, you know, when you have recency bias, you know, it can oftentimes, if you're, you know, chasing a move, you'll end up paying for it when there's the give back, and there always is a give back. So here's what we're looking for in the daily chart. We're starting to see something. I think we're probably going to run down and tag the bottom of this trend line right here. So I'm kind of watching for that in Qs. We broke the middle, this little middle marker that I had. If you look at the hourly chart, and I'll try to just go into a little more detail so everyone can understand. So oftentimes when you have a channel, the middle of the channel will be kind of a reaction point. So I marked that out. We had lots of reactions around it. We've just broken it today. We'll see if this hour closes below it. And if it does, we're probably going to move to the bottom of the channel, which sets us up probably for 229, about 229.60s, 229.70. So a move down to there. Now, what I'm looking for to reestablish a short, in my last video I said I'm going to cash. That doesn't mean I'm not on the hunt for another short, but and I'm not really interested in going long right now. I don't go long when I have divergences in place on the MACD or PPO and the RSI. When there's negative, especially when there's negative divergences in place, that's a bearish setup. So that tells me that there's a high probability of a breakdown, and it just matters when. So this can easily grind higher and continue to grind higher, but this down here, these indicators tell me that this is going to at some point break down, and we're going to get a move, an aggressive move down. So, and the bigger the divergences, the more aggressive the move. So it's all about risk reward. And you know, if this wants to grind higher, there's a little bit of reward, but there's a higher risk that we get a bigger move down. So I'm not interested in going long and, you know, just sitting in cash. What I'm looking for, though, is a solid sell signal, something on the daily chart. If I go to the daily, looking for some sort of a bearish engulfing candle. You know, maybe that comes tomorrow, maybe with the jobs report. I don't know, but looking for some sort of a bearish engulfing candle on the daily chart, or a breakdown of this trend line right here. You can see on the daily, we've got this trend line. That's a nice solid area. If we get a nice solid breakdown of that trend line, then that would be a sell signal. So something like that. Until then, probably just going to hang tough and wait for that. And let the, you know, if this wants to continue to grind higher, you know, I'm going to let it until, when will I flip bullish? Well, there's a couple things that I have to see, and I'll point those out here real quick. Okay, one, the divergences that are in place here on the triple Qs, they need to burn through. You know, they need to be burned through. And what that is basically, if you can make a higher, high, so, you know, up above this high right here where the divergence started, if you can break up and make a higher high, then that would burn through the divergence, and that would set, you know, that would set this up for a continued bullish move. So I need to see that. The second thing that is really difficult for me to flip bullish goes to the SPY, and really goes to the bigger picture time frames like the weekly. And the thing is that when I look at this chart and I continue to see this bull market that was broken back in 2018, the reason why I was able to call the very top of the market is because I had been looking at this chart for so long and this trend line. So when we broke in 2018 and I saw back testing happening in 2019, it just, I just continued to watch this trend line. And the fact that we rejected right here at the top of the trend line, and I'd had this trend line in place for, over a year and a half or so. So when the fact that we rejected right here just validates that this trend line is a valid trend line. So that tells me that we're trading below the bull market trend. That trend's been validated, that we are, we were rejected right here. And because we're trading below the bull market trend, for me to get bullish, I need to see a recovery of this trend. So if we can recover the trend up here around 360 and we can pop up above it and start to run higher, then I could flip bullish and use this longer term trend line as my bull market trend line. So if I have something to trade against, then I can flip bullish. But while we're trading below trend, I continue to look for shorting opportunities, and I continue to look for this thing to roll over. Now this could run all the way up to 360 or 350-ish, depending on when it gets there in the SPY. And I'm not going to take this bullish all the way up there, even though it could do it. I'll just have to sit those out, because what I'm really looking, because the thing is, we're below the bull market trend, and I don't know when this is going to roll over, if it's going to roll over. It could run all the way up here and then roll over. It could roll over now, could roll over, in a week or so. I don't know, but the probability is that it will roll over because we're below the bull market trend. So that's all that I'm saying. And if this wants to ramp all the way up and have like a melt up move all the way up to 360, then I'll just sit that out and I'll be waiting to get short up around 360 in the SPY. So what I would say is, if your time frame and you want to be bullish, and your time frame is weeks to months or whatever, then just understand where I'm coming from on my bearish calls. It comes from the larger time frames, the larger macro moves that I'm seeing, not from the day-to-day moves and even the weekly moves, but ultimately the large monthly moves, the large time frames. So as of right now, the short term is bullish, clearly. Everything's in an up channel, but the medium to long term that I see is we're below the bull market trend. So if you can't see this bull market trend and you're just focusing on the here and now of this latest rally, that's fine, but just be prepared to jump ship when the music stops, because what I see is that the music has stopped, and this is just the latest move. I think we're heading lower again, but again, I will be proven wrong on my larger time frame call if and when we recover this bull market trend line right here. So if we pop all the way up here and recover that, move higher and bounce against it, hold support and continue to grind higher, then I will be proven wrong. But that's just the bigger picture stuff. Looks like we're getting, this is interesting in the Nasdaq Futures. So we actually did just break down, and all right, so look, you've got this wedge here. If I mark it out, let me get rid of some of these lines here just to kind of clear this up. I'm going to leave them because I kind of need them. But all right, here's the Nasdaq Futures. You've got, see this upward channel? So this is your bigger channel that the futures have been in, and that corresponds with the Qs and the SPY, the channel, the upward channel that we've been in. But we have this little wedge that it put in right here. It's a bearish rising wedge, and you can see if I adjust this, let's say we adjust it here, if I adjust it right there, then I've got a reaction here, reaction cluster right there, a reaction here, and then we were kind of grinding along it right here. Then we broke down and recovered it. But what I did is moved it to the benefit of the doubt kind of area. So I've got a reaction here, and then I had another reaction right here, and we've now broken that that channel or that bearish rising wedge. There's really not, I can't make any other wedge here. So, and on the top, lots of reactions. So I think that sets us up actually to move to the bottom of the channel right here. So that puts us for a move down here, which probably sets the cues up for a move down to the bottom of the channel as well. So I just want to point that out. I think that might be an opportunity, something to notice. And that's if the futures continue to, sell off. XLV, this is just dead money right now. So continues to be dead money sideways. XLK, which is tech sector. This one you have a little bit cleaner of a bearish pattern than the triple Qs. This one doesn't include Amazon, but you can see bearish rising wedge right here. And we've got reaction, 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 lots of reactions around the bottom and several reactions along the top, 3. And so there's your bearish rising wedge pattern. We also have negative divergence in the PPO and RSI. So these are bearish. This is a bearish posture. Yes, it can continue to grind higher within the wedge. And if you don't notice the patterns or the other indicators, then all you see is prices grinding higher. You think it's bullish. And it is in the short term while you're grinding higher, but it's set up. This is a setup for a big bearish move down. So whether we get that, we don't know, but it's set up for it. So now we just wait for the trigger. And this was the exact setup that we had right up here at the top of this last peak. You can see rising wedge right up here on the hourly chart. I just kind of marked it out, and bearish negative divergence in the PPO and the RSI. So it's the same setup that we have right now. The divergences are even bigger now. But we have a bearish setup with a bearish pattern. We have bearish technical momentum indicators, and you just wait for the trigger. And when you get the trigger, it could play out for a big move down. It could play out for a smaller move down. We don't know the size of the move down, and it's hard to understand the size of the move. All we know is that it's set up to move down. So keep that in mind as you continue to watch this grind higher, that it is set up that way. XLF, I don't see anything necessarily bearish in XLF right now. My chart got jacked up on this one, but you could say that's maybe a bearish rising wedge. It's hard to say because there's only a couple reactions. We'll look at it, but we don't necessarily have bearish divergence. We do a little bit if you go way back here, slightly bearish negative divergence. So that's an equal. This is equal. So in general, this one just doesn't look as bearish, the XLF. So we'll have to watch that. Tech looks more bearish than the financials. So IWM, which is the small caps. Pop the gap right here. We're chopping above it. We'll see what happens. Ultimately, it's still bullish, and yeah, it's still bullish. So we'll have to continue to watch the small caps because they can be a leading indicator oftentimes. So I don't see any substantial change from yesterday in this one. Okay, and then let's look at the two juggernauts. I don't look at Google and Facebook and, Amazon. Yeah, that one's important too. But Apple and Microsoft are to me, the major players in the tech area. And so I want to know where these things are heading because this will tell me where tech goes, and where tech goes, the market goes. And it's like a domino effect. So I always keep an eye on these. And Apple, still bullish, still just grinding within this channel higher. We are below this, you had this trend line that was in place. Momentum is pretty much, flat just about. We've really lost a lot of the momentum. So it continues to just hold up. So while it continues to just hold up, we'll just sit there and wait for a sell trigger. We don't have one yet, but we're watching for it. Microsoft, this one continues to kind of chop around its support line. This is the support line right here. and we continue to violate it, kind of chop down through it, pop above it, chop down through it again. We're below it again today. So we're starting to see some volatility or indecision around this support line. There's some sellers that are coming in trying to hit this thing down, and then the buyers, the dip buyers, are buying it back up, and it's just trading around the support line. So what we'll do is we'll wait for a more confirmed sell signal, and we'll probably get a correlated sell signal in Apple and some of the other areas when that comes. Same thing though, you had nice strong momentum up, and now momentum has, pretty much flattened out, and we're starting to lose momentum basically. Here's XOM oil trade. I am interested in owning this one long term, but what I was looking for in this is another leg down and for them to cut their dividend. That was going to be my signal for wanting to buy this for kind of a buy and hold longer term trade, and we haven't seen that yet. We got the first leg down. We've seen this rally. They haven't cut their dividends, so for me there's just too much risk out there to want to buy this. If they were to cut their dividend and we got another leg down, that would eliminate or wash out a lot of the downside risk. And then at that point, I would be interested in probably owning this long term. This has a bearish rising wedge. It continues to grind within the wedge. So until we see something, we'll move on. TVIX. So this broke down yesterday, and we broke down once before, but you can see we're below this support line right here and still trading below it. So this one is, for me right now, it's kind of a no touch. I'm not really interested until we recover this trend line. If we can snap back up and recover it, then I would be interested in owning some more TVIX and watching this thing move higher. This is a bullish falling wedge, although not a very steep wedge. It's almost a channel, a price channel, but TVIX doesn't always chart perfectly. I look at the SPY as more of an indicator of where TVIX is going to go. So chart the SPY and understand when the SPY might break down, and that will help you evaluate the TVIX. And that's really all I got. I was looking at this teledoc. It's another high flyer, but I don't see any patterns that look good for shorting it right here. So, and I don't see anything really good at this level for going long. So that's all I got, guys. Let me know if there's something you want me to look at, and I will do my best to try to chart that out. Otherwise, thanks for the following along. Leave me a thumbs up. Appreciate that. And I'll catch you guys on the next video.